Hello, good morning, ladies and gentlemen. How are we doing this morning? Let's confirm that we are good to go. So if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section so that we can get the session started. So let's see what's happening right here in the comment section. Okay, I'm trying to load up my comment section. Okay. All right, so I think let's see what's happening here. Okay, Carrie, good morning to you. Thank you for that confirmation. All right, 176. Okay, thank you. 526, thank you. 428. All right, safe field. All right, okay. Okay, echo, is there an echo really? All right, okay, thank you for that confirmation. I guess we are good to go. So I'm excited to welcome you to another promising session on the X-Trend Speed. My name is Sheriff Daramola, and in the next 1 hour I will be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. So with that being said, here we shall be, before we go into the chart, obviously we are going to be looking at the economic calendar, and it appears we're beginning to see some traction in the US dollar since the GDP for the Chinese Republic was released earlier on this morning. So this morning we saw a positive figure for China. That is the GDP quarter on quarter and year on year. We have a consensus of about 2.9%, which is quite positive. And for today, we are also looking forward to the claimant count change, which has already happened. And from the figures we have here, it's quite low compared to what we had last month. And you can see here the last figure gave us about 30,500, and we had a drop to about 19,700, which is not really good for the pounds as well. And then we have the high LO unemployment rate also, which has remained unchanged. So I think that's the only macroeconomic event we are looking forward to today. Okay, we also have the EURJPY, and we have the harmonized index of consumer prices, which that also has been left unchanged. So there is not much difference here, and that is all we are looking forward to for today, and it has already happened. So we are going to be relying on our technical skills to identify trading activities lining up for us today. So with that being said, I will be diving right into the charts, and let's see what is happening from a technical standpoint. So the first commodity we are going to be looking at this morning is the US oil. So we will be doing a quick review of what our expectation was as at yesterday, and then look at how well the trade went by, and if there are any changes we need to be making, we shall be deliberating that through during the course of the session. So here we are on the 1 hour time frame of the US oil, and during the course of the live session yesterday, we were around the $79.65, somewhere around here. And considering the structure we had at the beginning of the week, where we noticed our price action was initially caught within the $80 level and the support area at the $79.50 level here. And one thing we look forward to after citing the breakdown of that support level here, which also shares a beautiful confluence with that bullish trend line that we were able to identify, and that has been holding bullish momentum since last week's trading session. So we saw the breakdown retest of the structure, and what that signaled was a bearish momentum, and we positioned ourselves in such a way that we caught that move right around the $79.50 level. But one thing about this structure is that as soon as price, though we had the bearish momentum move, price action moved about, let's see, price action moved about 50 to about 80 pips in our direction before we started seeing some buy pressure coming in around that area. And remember, I told you that as soon as price triggers our position, we want to be moving our stop loss accordingly to lock in some profit, and which we have done. And price action moved back into our entry point, and as you can see here, we were taken out of the position with some small profit at this point. Now, there is something here that is quite interesting that happened during the early hours of today. If we take into consideration the buy pressure that happened here during the early hours of today, we saw how this level had the $79 level had been holding buy pressure. Buyers were trying as much as possible to negate all selling momentum, as all attempt by the sellers to break down the structure has been met with strong resistance from the buyers. And you can see the nature of the wicks here. It was quite sharp. As soon as price gets there, it gets rejected every single time it does that. And if we look at the $79 level and go as far back as last week, we will see that that level also at one point in time has held by pressure at that point. So it has a tendency for bullish momentum here. It has a memory for buying power. And as a result of this, what I did next was to identify this trend line after connecting the series of lower highs. Remember, at the beginning of the week, we were looking forward to a possible retracement, and price action continued to find lower height. So after connecting the series of lower highs here, we will definitely be using this to guide our trading activity for today. And with the breakout of that trend line here during the early hours of today, sharing a beautiful confluence with the $79.50 level here, we will definitely be thinking of bullish momentum, as it appears that this bearish trend line appears not to be strong enough to hold selling pressure at this point. But there is a catch to this current situation here, and the fact that the $80 level is still there and price action still continues to trade below that structure. Remember how important the $80 level had been in the last couple of months. Prior to this present moment, it has been a strong selling niche for participants in this market. So we need to take into consideration how price action is going to be reacting to that structure. Though I had a buy position triggered here during the early hours of today above the $79.50 level, with the hopes that price will break out and retest the $80 level to incite the second wave of the bullish momentum that started last week. But with that being said, we would like to scale up a little bit to the daily time frame. Let's quickly run through what is happening there. Let's see how important the $80 level is. For those who are not part of the live session yesterday, you will be able to see how important it is and why we are using that level as a yardstick for trading activity. So if we scale up to the daily time frame here, this is what we were able to identify here. The first thing we did on the daily time frame was to look at the long-term perspective here, at least for the last 6 months. And one thing we observed is that since the month of June last year, price action had continued to find lower heights. And after connecting the series of lower highs here, we have this bearish trend line figured out at this point. Now, if we zoom into what has been happening since the month of September, we can see that price initially was caught within a consolidation phase between the $93.50 level, which was serving as a supply zone at that particular point in time. And then we have the demand zone sitting somewhere around the $75 area to emphasize some level of indecision for like 2 to 3 months here. We saw some consolidation phase between that $93.50 level and the $75 area. But not until the first week of December, we saw the final breakdown of that $75 level to incite some bearish signal in this market. And that selling momentum that broke down the $75 level, which we said has been holding by pressure since the month of September, was instigated from the $80 level here. So we saw that the $80 level has been a strong selling niche for participants in this market in the last 4 to 5 weeks now. We saw the same thing happen during the later part of the month of December, and last year closed exactly around the $80 level. And at the beginning of this year, we saw this huge engulfing candle which took price to the downside, breaking down the $75 level one more time to signal a possible bearish momentum at this point. But the fact that price was unable to break the previous low here at the $70 level, as you saw here, as soon as price tested the $72 level, we saw a little consolidation phase around here, which triggered another wave of bullish momentum as price broke out of the $75 level. So this was a move we took last week, and we had our TP target sitting around the $80 level. And if you look at the nature of the $80 level here on the daily time frame, you would see how important this confluence is here. Look at the structure we have here. Look at the bearish trend line and look at the $80 level here. It shares a very beautiful confluence. So you would agree with me at this point, we are at a critical point in this market where anything could actually happen at this point. So price continued to oscillate around the $80 level, which shares a confluence with our bearish trend line in the last 72 hours. I think since Friday we have been seeing that oscillation around that area, and since the beginning of the week, price action is yet to break out of the $80 level. So at the beginning of the week, we were looking for two possibilities that could happen here. And if we take into consideration the breakout of the $75 level, there is a tendency that we could have some selling pressure come in again, whereby price action respects that bearish trend line one more time to bring price back into the structure, probably in anticipation of another wave of bullish momentum. So that is one scenario we were looking forward to this week. Then the other possibility that could happen here is if price breaks out of the $80 level here, breaking out of the bearish trend line as well, giving us a sign that the bearish trend line is no longer strong enough to hold bearish momentum. Then at this point, we might be seeing this as a bullish signal, and we want to be taking advantage of a bullish momentum. And if at any point in time on our lower time frame we start seeing buy pressure come in right above or around the $80 level, it will be a good situation for us to add more position to our existing trade. So these are the scenarios we are looking at from an holistic point of view. But in order to make a decision going into the New York session today, we need to understand what is really going on around the $80 area on our lower time frame to decide what our next line of action will be. And if we take into consideration what has been happening here since the month of November, when price action tested the $93.50 level, a level which shares a confluence with that bearish trend line, we saw that we had an impulsive bearish leg that pushed price into the $70 level. We saw price come back into the $80 area. Price dropped into the $72 level as price action was unable to break the previous low, hereby giving us a higher low, a signal that gives us a sign that buyers are gradually coming in at this point. And if you look at the structure from a technical standpoint, it looks more like a double bottom structure, which from a technical standpoint is a very strong reversal pattern. And whenever we have a reversal pattern like the double bottom structure like this, the next thing we want to be doing is to identify a neckline which we shall be using to guide trading activity. And with this current situation here, look how that $80 level fits into fits perfectly well to be called the neckline for that reversal pattern. So for this reversal pattern to mature and be confirmed, we want to see an outright breakout of the neckline area at the $80 level, which also shares a confluence with that bearish trend line that we identified earlier, to give us that beautiful signal that we are ready to join that bullish momentum to the upside. So in that regard, we will be looking at what is happening around here. If we are going to be seeing structures on our lower time frame that will be triggering a bullish momentum that will lead to the breakout of the $80 level. So in that regard, we will be scaling down to the 1 hour time frame, and for that sake, let's roll down to the 1 hour time frame and let's see what is really happening around the $80 level since the beginning of this week. So here we are on the 1 hour time frame, and this is what we had. And remember, the week started on a bearish note, which we took advantage of yesterday, but we were taken out of our position with some small profit, and worst case scenario, you might have been taken out with probably at break even. So I told you this morning that after citing the breakout of this bearish trend line, which has been holding bearish momentum since the beginning of the week, and also it shares a confluence with that $79.50 level, which we said is a support level for this week, I took advantage of that opportunity right there with the hopes that we are going to be seeing a breakout of the $80 level. Remember how important the structure is on our daily time frame. So at this point in time, I already have this position running, and if you're part of this trading journey, kudos to you for being on standby to catch that move. So I'll be advising you to move your stop loss to break even at this point. Now, for those who had missed out on this opportunity here, well, I would advise you to remain patient. We already have a breakout of the trend line here, so we want to see price continue to climb up, finding higher highs at this point. And remember how we said the $80 level has been holding selling niche for this market in the last couple of months. So we want to see an outright breakout of the $80 level to give us a confirmation that the bulls are here to stay. So for those who had missed out on the breakout of the $79.50 level, let's remain patient and wait and see how price action will react to the $80 level. So what I want to be seeing to add more position to my USOil is to see a breakout of the $80 level, price action taking out all the sell positions here to give us a confirmation that buyers are here to stay. And if we are lucky enough, we start seeing buy pressure, price comes back to do a retest of structure at any point in time, it will be welcoming an additional position to our existing trade. So this is what we are going to be looking forward to on the USOil to buy the USOil. So what with the current structure we have here, as long as price action remains above the $79.50 level, we want to continue to feel comfortable in our buy position. And if price breaks out of the $80 level, we get ready to add more position to our existing trade. So this is what we are going to be looking forward to buy the USOil for today. However, if at any point in time price takes us out of our existing position and leads into a situation where price breaks down the $79 level, remember how that level has been a strong niche for buying power since the beginning of this week, and in fact to as far back as last week's trading session, we saw how that level had continued to hold buy pressure. So if that level is broken to the downside, then I would like to see this as a bearish signal, as sellers are still very strong in this market. And if that breakdown happens, I want to be joining a decline to the downside, and a retest of structure give me more opportunity to add more position to our existing trade here. And remember, if we are selling right below the $89 level, I want us to see this as a counter trend opportunity, as remember last week was a bullish momentum, and this move could likely be a retracement of that impulse leg. This is the impulse leg that started last week, and if a breakdown of the $79 level happens, we will be seeing this as a retracement phase. So we want to be monitoring this judiciously well. As price action moves in our favor, we continue to move our stop loss accordingly to lock in some profit, lock our position against any sudden pullback that might likely happen. And as soon as price gets into the $77 level, move your stop loss. Remain patient and watch out and see how price action will be reacting to the structure to decide if it is time to be joining another wave of bullish momentum to the upside, from this level, or a breakdown of that structure followed by selling pressure, will be giving us an opportunity to add more position to our existing trade. So these are the views we are going to be looking forward to here on the US oil. So to cut the whole long story short, we have a situation here. We already have a buy position running here, and I said we want to feel comfortable in our buy position as long as price remain above the $79.50 level, and the further breakout of the $80 level should be giving us a leverage to add more position to our existing trade. And I told you how the $79 level shall be our guide for selling opportunities. As price, we will look forward to price breaking down that structure for us to sell the US oil. So this is what we are going to be looking forward to on the US oil for today. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. So from time to time, I will be checking the comment section to see if there are any questions as I move on to the next option. So the next option we are going to be looking at this morning is the US tech, and the US tech is a little bit choppy since the breakdown of that channel we identified on the 1 hour time frame here. So this is what we saw at the beginning of the week. We were able to successfully identify a channel between the 11,570, which is the resistance point of that channel, and then we had a support level sitting at the 11,520 area of that channel. And we had a beautiful signal yesterday morning at the breakdown of the 11,520, which finally led to the breakdown of the $11,500 level. Remember how important that structure is on our daily time frame. I will be showing you that in a moment for those who had missed out on our analysis yesterday. So I will be showing you that in a moment. So we have the breakdown of the 11,520. Price action came back to do retest of structure with a lot of selling pressure around that area to give us an opportunity to sell one more time. So we had sold at this point, moved our stop loss to break even here. But one thing we have observed here in the last 12 hours on this option is the fact that as soon as price got into this bullish trend line, remember how the bullish trend line has been guiding bullish momentum since for the last 2 weeks now. Remember, so we saw how that bullish trend line has been guiding that bullish momentum. Now in the last 4 to 5 hours now, as soon as price tested that bullish trend line, we have been noticing some buy pressure come in gradually at this point. Now, in addition to the identification of buying pressure right above this bullish trend line is the fact that this, as soon as price tested the 11,470 level, we saw that price was unable to break the previous low here at 11,450. So this might likely turn out to be a reversal pattern that might be inciting another wave of bullish momentum here. So before I go into the details of what our expectations are for today, first of all, move your stop loss if you're already in this trade to break even here, and let's scale up to the daily time frame and let's see what is really happening and how important we said the $11,500 level is at the beginning of this week. So scaling up to the daily time frame here, the first thing we observed on the daily time frame is that price action has been very bearish throughout the course of last year, and in fact that bearish trend line continued and consistently held selling pressure. As you can see, all the lower highs for last year fell right below and within that trend line. Now things got a little bit interesting in the month of June, where we saw the $11,000 level continue to hold buy pressure, negating all attempt by the sellers to break down of the structure. And this held quite well for a while. I think about 2 or 3 months it continued to hold buy pressure, and in that regard we had this $11,000 level as a key level we wanted to be using to guide trading activity for this year. And following the last impulsive move that tested the bearish trend line here, we saw this leg come into the structure where price action transitioned into a reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern, you know the next thing we want to be doing is to identify a neckline which we shall be using to guide our trading activity. Now, if you look at the neckline here, it falls within the $11,000 level, which we said is a very good key level we want to be using to guide trading activity. And we saw the breakout retest of that structure during the last week trading session to give us an opportunity to buy, and in fact we enjoyed this move all the way up. We had multiple entries as well, as we took our TP target at around the $11,500 level with a minimum of about 500 pips in profit for last week. And since the beginning of the week, we can see how price action had continued to consolidate around the $11,500 level. Now, how important is the $11,500 level with this current structure? Well, if we go to as far back as the month of November here, after price action broke out of the 11,700, we saw a huge consolidation phase between the 12,100 and the $11,500 level. So this was the resistance level of the channel at the 12,100, and this is the support level of the channel at the 11,500. So the support level of the channel held by pressure for about a month before we saw the breakdown of the structure here during the mid-month of December. And price is right back into that structure at this point, making it a critical point in this market right now. So since the breakdown of the structure, normally we expect from a technical standpoint that whenever price breaks down a structure, we might likely see a situation where price comes back into the structure, price action transitions into a reversal pattern that will incite another wave of that momentum to the downside. So at this point, we really need to understand what is really going on here, and we want to be identifying a technical structure that will be giving us an insight into what our next line of action will be around this point. So the question we are going to be asking for this week is, are we going to be seeing a trend continuation pattern around here, probably in the form of a bullish rectangular pattern, a flag pattern, a wedge, whatever it is, breakout retest on our lower time frame to give us an opportunity to buy? That is one scenario we are looking forward to. Or we might see a situation where price action transitions into a reversal pattern, like a double top structure, head and shoulder pattern, selling pressure in our lower time frame to incite a bearish momentum, which might likely come back into the $11,000 level, which was broken during the course of last week's trading session, to incite another wave of bullish momentum, or probably break down that structure to incite a sell-off in this market. So you can see that we really need to understand what is really going on around the 11,500 to make a decision for today and for this week. So in that regard, we shall be scaling down to the lower time frame, that is the 11,500. Let's see what is really going on there, and let's use whatever structure we have there to make a decision for today. So going back down to the 1 hour time frame, here we are on the 1 hour time frame, and that is the $11,500 level we identified on the daily time frame, and it's has been serving as a key level for trading activity for this week. So that's the 11,500. We saw the breakdown of that channel. Price breaks down both the channel here of the support level of the channel here at 11,500 to the downside to give us a signal that there is a bearish signal coming in. But one thing we saw here is that price was unable to break the previous low to further emphasize the strength of the sellers at this point. So in that regard, we want to be as fluid as possible so that we can join that bullish momentum when it happens. So if this bullish trend line is going to be strong enough to hold that bullish momentum, then we want to be positioning ourselves in such a way that we can catch that move when it happens. So the next thing we did here, and we are going to be doing right now, is to bring out our line chart. And remember, since the beginning of the week, we have been seeing selling pressure. Price has been finding lower heights but unable to find lower lows at this point. So we shall be connecting the series of lower highs here. So here we are, that's the lower high, and we have a beautiful bearish trend line there. So we shall be using this trend line to guide our trading activities for today. So let me do some readjustment. So we have something like this, and now what we are going to be looking forward to as we start seeing buy pressure come in right above that bullish trend line, we want to see an outright breakout of the structure at the $11,500 level, which also shares a very beautiful confluence with that bearish trend line we just identified now. So what we are looking forward to buy the US tech is to see price break out of the structure that we buy, Then if price comes back to do a retest of structure, which from a technical standpoint is a usual scenario on this kind of breakout structures, then we want to be adding more position to our existing trade. And then remember that we have this resistance level for this week at 11,570. So if price action further breaks out of that structure, it will be a very good opportunity for us to add more position to our existing trade. So this is what we are going to be looking forward to buy the US tech for today. So we want to see price break out of that bearish trend line, which I said also shares a beautiful confluence with that $11,500 level, which is a very important key level on the daily time frame, and I showed you earlier. Now, what happens if price does not climb above the 11,500 but instead continues to drop to the downside? So remember, we have this bullish trend line which has been holding bullish momentum since last week. Remember, this is the bullish trend line here, which has been holding bullish momentum since last week, and following the selling pressure we have been witnessing since the beginning of this week, it is very likely and there is a high possibility that the selling pressure here will break down that bullish trend line. And if the breakdown of that bullish trend line happens, this is going to be a beautiful signal that sellers are coming in gradually in this market, and we might likely be seeing a retracement of that impulsive move that started last week to the downside. And if a further breakdown of the 11,400 level happens, followed by selling pressure on our lower time frame, we want to be adding more position to our exiting trade. So what this simply means is that below the $11,500 level is an area we want to be looking out for selling opportunities, and we shall be using both the bearish trend line here and the bullish trend line to guide our trading activity for today. So a breakdown of this bullish trend line should be giving us an opportunity to sell, and a breakout of the bearish trend line here, which also shares a confluence with 11,500, will be giving us an opportunity to buy the US tech for today. So let's be on standby to catch this move, and I hope you screenshotted my screen so that you can use it as a reference point when you're about making your individual decision during the New York session today. So these are the scenarios we are having on the US tech for today. So if you have any questions or you need me to shed more light in a particular aspect you really didn't understand, feel free to drop your inquiries in the comment section, and what I will be looking at the comment section from time to time to see if there are any questions that I can be of help in that regard. All right, so let's move on to the next pair. And the next pair we will be looking at this morning is the GBPUSD. And the GBPUSD also has been in a huge consolidation phase. Remember, we have been looking out for selling opportunities on the GBPUSD. And the reason why we had the situation here is simply because of the selling pressure we have been noticing around the 1.22500 since last week's trading session. Though we had a little breakout of that structure here, which appears to be a false one, considering the fact that as soon as price tested the 1.22900 level, we begin to see some selling pressure that led back to the breakdown of the 1.22500 level. And since the breakdown of the 1.22500, price action has been trading below that level to further emphasize the strength of the sellers at this point. So going into the New York session yesterday, we had the situation here where we said if price continued to trade below the 1.2200 level, a retest of that structure, we saw the breakdown of that structure. Price action has done some couple of retests of this level. We want to be in a sell position, so we are already in a sell position right now, and the sell position is still running as price action continues to trade below the 1.22 level. But one thing about the structure here since last week is the fact that price has been caught within a channel, a range between the 1.22500 and the 1.21650 level, to further emphasize that there is some level of indecision in this market as participants are not sure where price will be heading. So people have been trading within a range of about let's see, a range of about 70 pips, 70, 80 pips thereabouts since the later part of last week. So if you're already in this trade right now, you sold right below the 1.22200 level, well done. And the next, if you had missed that move, well, I will be advising that you remain patient at this point, and we want to be seeing price action break down the 1.21650 level to give us another good opportunity to add more position to our existing trade. In fact, if price breaks down the 1.21650, we should be very comfortable in our sell position. As you can see here, this level since Friday has been holding by pressure, and we really need to see that breakout of that level, breakdown of that level, to give us a real confirmation that sellers are gradually coming in this market. Now, I would like us to look at the daily time frame at this junction. Let's see what is going on there. Let's have an holistic view of what is really happening there, and let's see if we are really on track as we continue to monitor price action. So back to the daily time frame here. Throughout last year, obviously, we noticed how the bearish momentum had gripped this market, and as a result of this, we had this bearish trend line after connecting the series of lower highs here. However, during the later part of the month of September, we saw this bullish momentum started here at the 1.0400 level, and then price continued to find higher lows, which led to the breakout of that bearish trend line. So that trend line here did not have the capacity to hold bearish momentum anymore. So we had a new bullish trend line here, which guided price action into the 1.200 level here, and this trend line will continue to guide our trading activity. In addition to the trend line here, this bullish trend line is the 1.200 level, which we said is going to be our key level for this year. And if we look as far back as June of last year, we saw how that level had been a major determinant of price action. So we can see at the beginning of the year, we saw buy pressure come in right above that bullish trend line to incite a bullish momentum. And one thing about this structure is it has a tendency of breaking out of the 1.22400 level, considering our price action has respected that bullish trend line, and at the same time breaking out of the 1.200 level. However, something interesting happened last week as we saw a choppy situation on the GBPUSD, where price action was caught within a consolidation phase between the 1.22500 level and the 1.21200 area. So we had a choppy situation here as the 1.22500 level continued to reject all attempts by the buyers to break out of that structure. So at this point, we need to be very careful as to buy the GBPUSD. At this point, we need an outright breakout of the 1.22500 to give us that confirmation that buyers are gradually coming in this market. Now, if we look at what happened during the trading session yesterday, look at this candle. It closed in the form of a shooting star candle, and when you look up a shooting star candle from a technical standpoint, it's giving us a sign that sellers are still very strong in this market, and you can see the continued rejection of the 1.22500, further emphasizing that level as a strong selling niche. So at this point, like I said yesterday, I'm not sure if it will be appropriate for us to sell below the structure if we continue to see selling pressure here from the daily time frame, looking at it from the daily time frame here. And one thing that will give us good confirmation is a breakdown of this bullish trend line followed by selling pressure below the 1.200 level to give us a real confirmation that sellers are coming in and are in this market to stay. But if price continues to stay above the 1.200 level, if we take some sell position here, we need to be very careful, move our stop loss accordingly as price action moves in our direction. But buying the GBPUSD now, we want to be seeing a 1.22500 level break before we can be thinking of buying based on this current structure. So now scaling back to the 1 hour time frame, let's see how price action has been reacting to the 1.22500 level since the beginning of this week. Now look at the 1.22500 level here. It's a golden line we've identified here, so you can see the sell pressure around that level, though we had a breakout initially at the beginning of the week, but price came back below that structure and price has been trading below that level. So for me at this point, if price continue to remain below the 1.2250 level at the 1.22200 level, we will be comfortable in our sell position. And if we are lucky enough and price action does an outright breakdown of the 1.21650, well, at this point I will be very comfortable in my sell position at this point. So if for the breakdown, we welcome additional position. If for the breakdown of the 1.2100 level also, which also has this buy pressure here since the second week of this year, also will be welcoming another position at this point. So let's remain bearish at this point as long as price remain below the 1.22500 level. So we still remain bearish. We're looking out for holding onto our buy position, sell position rather, and look out for opportunities to add more position at the breakdown of structure. So if price breaks out of the 1.22500 level, then we could be thinking of buying the GBPUSD at this point. But for now, let's keep on holding to our sell position here. So that's been said here on the GBPUSD. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair right now, and the next pair we are going to be looking at today is the, is it the USDJPY or the XAUUSD? I think we did the EURJPY, which Steamroller introduced to us yesterday. I hope Steamroller is still in the house here. If you're around, just say some hi, let me know you're around. Okay, so right now on the EURJPY, we continue to see bullish momentum continue to the upside. And remember, during the live session yesterday, we were around here at the 138.00 level. And one thing we observed on the EURJPY is the fact that following the impulsive move we identified here yesterday, we saw a little bit of reversal pattern here in the form of a double bottom structure, and immediately we identified that structure. The next thing we did was to identify a neckline, which we said we shall be using to guide trading activity. And how are we going to be using that neckline to guide trading activity? Well, we want to be seeing a breakout retest of that neckline to give us a confirmation that the reversal pattern here is matured. So this is the reversal pattern here. We have the neckline at the 138.800, and we said we are looking out for a breakout retest of the structure to give us a confirmation to buy. And in fact, that's exactly what happened. Price broke out that structure. In fact, it did a couple of rejection of the neckline before another wave of bullish momentum appeared to be coming in at this point. So for those who are taking advantage of this opportunity right above the $138.800 level here yesterday, kudos to you for being on standby, as you will currently be running with about 70 pips in profit at this point. So you want to be locking in your profit right now. At least you don't want to lose out on any of this position you have taken. So I will be suggesting that somewhere around the 139.100 level should be most appropriate to move our stop loss here, so that we can give some breathing space for price action to move around before the potential second leg of the bear bullish momentum will happen at this point. Now, in addition to this current structure here, I was able to identify another structure around the 139.250, a level which at one point was holding buy pressure before we saw the breakdown of that structure here on Friday of last week. And since the breakdown of that structure, we have been citing selling pressure right below that level to emphasize some selling strength around that area, and that is negating the bullish momentum at that particular point in time. So we want to be seeing a breakout retest of that structure to give us a confirmation that buying opportunity is ripe enough for us to join. And in fact, we saw the breakout retest of that structure, and it was a good opportunity to buy or add another position to the EURJPY at this point. So if you are also taking advantage of that move, kudos to you, as you will be running with about 30 pips in profit at this point, and coupled with the 70 pips running, you will definitely be in about 100 pips at this particular point in time. And for those who had missed out on this opportunity here, on these opportunities that we have taken since the beginning of this week, well, let's see if the market will be presenting us with another chance to add more position to our existing trade. So before we go into the details of what our expectation is for adding more position here, let's run through the daily time frame and see what is really going on there. Let's see if what we are taking right now is still in alignment with what the bigger picture is saying here. So if we scale up to the daily time frame, hold on a second, let me load up the daily time frame here, and this is what we had. So during the live session yesterday, we identified a simple structure here where we first of all observed that there has been some selling pressure in the last 7 months here around the 146.00 level. So we identified that area as a supply zone. Then in addition to that, we saw this bullish trend line which has been guiding bullish momentum since the month of August, and that trend line was broken here on the last week of last month, that is December last year. We saw the breakdown of that structure, and since the breakdown happened, we have been witnessing selling pressure below the 143.00 level. And every time price rejects the 143.0 level, we see sellers bringing price into the 138.00 area. Let me zoom in so that we can see things more clearly here. So we saw how the 138 level has been holding bullish momentum on the EURJPY, and if we zoom to as far back as the month of August, we saw that following the breakout of the 138.00 level here, we have been witnessing buy pressure coming in from that structure. You can see like 6-7 times we have been witnessing buy pressure, and since the beginning of the week also here we have been seeing buy pressure, and thank goodness we were able to join that bullish momentum. We were lucky enough to catch that move, and we're already riding that move all the way up, hoping the price will get back into the 143 one more time again. Probably we will be seeing another selling pressure from there, but for this moment in time, let's continue to guide our position right now. So this is what we have on the daily time frame. We have a demand zone sitting at the 138, and we identified a reversal pattern here on our 1 hour time frame, which has been guiding our bullish momentum right now. So going back to the 1 hour time frame here, so we zoom in here and see what we have here. So like I said, if you had missed out on both opportunities that we had here since the beginning of the week, well, we have another structure sitting somewhere around the 139.600 here. As you can see, it has been a selling niche. Sellers has been rejecting that level since last week. Since last Friday, we saw the first rejection here. We saw the second one also around that area. Then we saw one here during the early hours of today, and it appears prices are approaching that structure at this point, and we are already seeing some selling pressure come in at that level. So at this point, we want to remain patient. Let's see how price action will react to that structure. So for the sake of clarity, I would label this so that when you screenshot my screen, you can be able to use it as a reference point when you're about making your individual decision here on the EURJPY. So I want to be giving this a purple color so that it will be different from the previous structures we identified earlier. So what we are going to be looking forward to is a breakout retest of the 139.600 to add another position to our existing trade. So let's remain patient if you had missed out on both opportunities here. So we wait for a breakout to buy, and a further breakout of this trend line also will be giving us an opportunity to this trend line here. The resistance level of this channel here shall give us an opportunity to add more position to our existing trade here. And don't forget what I told you yesterday regarding this current structure, that is the bullish trend line, which has been guiding bullish momentum since Friday of last week. I told you how this trend line will continue to guide our trading activity for this week. So what I said is, if price continue to respect that bullish trend line and we continue to see price action above that level, we want to feel comfortable in our buy position. However, if at any point in time price breaks down that bullish trend line, then at that point we want to be seeing this as a bearish signal, and we want to be getting ready to join that decline to the downside. And if you join the decline to the downside, remember that we have the 138.00 level. I'm trying to bring this out so that we can see it. So if price breaks down the 138.00 level, we will definitely be looking forward to adding more position below the structure here on the EURJPY. So let's continue to monitor price action here. So we have a simple setup. We continue to look out for bullish momentum as long as price remain above this bullish trend line here, and if price breaks down the trend line, then we get ready to join a decline to the downside. And you know, we are on the bearish momentum here, at least in the last 2 weeks. So if a breakdown of that bullish trend line happens, then it just gives us a signal that this bullish trend line does not have the capacity to hold bullish momentum any longer. So these are my views here on the EURJPY. I hope I made myself clear. If you have any questions, feel free to drop your inquiries in the comment section as usual. Let's see what's happening here. If there are any questions, let me run through. Okay, I see Steamroller's comments. Glad you're around. Trust you are doing well today. Okay, so in the absence of no questions, I want to assume that we are on the same page here. So in that regard, I will be moving on to the next pair. And the next pair we are looking at is the gold. And in fact, the gold has been doing well so far, though it was a little bit choppy. During the New York session yesterday, but it appears things are moving on fine as expected here on the gold. So where were we during the live session yesterday? So during the live session yesterday, we were around the $1,917 level here, where I told you that I had a sell position running below the 1,920, and with a breakdown of the $1,916 level, a retest of that structure should be giving us an opportunity to add more position to our existing trade. And this is exactly what happened here. Price broke down the 1,916. We saw a couple of rejection of the $1,916 level to emphasize some level of seller's strength around the $1,916 level, giving us an opportunity to add more position to our existing trade. And this has gone in such a way that price has broken down that key structure again we have at the 1,920 to trigger another position here. So for those who have been part of this trading journey since the beginning of the week, kudos to you for being on standby to catch that move as you will currently be running. So the first position is running with about 1,300 pips. The second position is running with about 1,000 pips. And the third position here is running with about 400 pips at this point. So well done, guys. If you have been part of this trade, kudos to you. The next thing we want to be doing now is to move our stop loss, and I think the most appropriate area to move our stop loss is somewhere around the 1,914. So let's give some room between 1,914 and 1,916 is most appropriate here. Let's give some room for price action to breathe before a potential decline to the downside happens at this point. So we continue to hold on to our sell position here on the XAUUSD. So in that regard, where will our take profit target be? Well, for the take profit target on the XAUUSD, I'm hoping that price will come back into the $1,880 level here. Remember that at the beginning of last week's trading session, that level was the resistant level for the week, and we saw the breakout of that structure here on Thursday. We saw the breakout of the $1,880 level, which I said is the resistant level for last week's trading session. So since the breakout of the structure happened, well, from a technical standpoint, we should be expecting that price might likely come back to do a retest of that structure to incite another wave of bullish momentum, or at most case scenario, we should be having the 1,895 level here, which shares a confluence with this bullish trend line that has been guiding bullish momentum in the last couple of weeks here. So we might likely see a situation where price comes into the 1,895, after which buy pressure around this area will be giving us an opportunity to join a potential trend continuation to the upside. But if price breaks down the trend line, breaks down the 1,895, then we'll definitely be looking out for opportunities to add more position to our existing trade here. So for those who have been part of this XAUUSD journey, kindly move your stop loss. Like I said, let's continue to monitor price action and let's see how far this move is going to go before the second wave of bullish momentum will happen. And if price breaks down structures, we continue to look out for opportunities to add more position to our existing trade. So these are my views here on the XAUUSD, and I would have loved to take one more pair before I close the day, but so out of time, so let me just use the last couple of minutes to do a recap of what we talked about today, and then we draw a curtain for today. So the first commodity we looked at this morning is the USOil, and we are already in the buy position running, and I told you to move your stop loss accordingly, lock in some profit here. And for those who had missed out on the breakout of both the $79.50 level and this bearish trend line, I have said that we remain patient here and wait out for price action to break out of the $80 level to give us an opportunity to add more position to our existing trade. So kindly wait out for that to happen as the bullish momentum, as price action appears to be finding higher highs on our lower time frame. So selling the US oil will not happen unless price breaks down the $79 level. So let's keep this in mind. We are not selling the US oil unless price breaks down the $79 level to the downside. So as long as price remain above the $79.50 level here, we continue to hold on to our buy position and remain comfortable as the move continue to move to the upside here. So best of luck on this one. Then we went on to talk about the US tech, and on the US tech also, remember we are already in a sell position since yesterday after citing hold on a second, I'm trying to so after citing a beautiful channel between the 11,570 and the support level at the $11,520 level, we saw the breakdown retest and we joined our sell momentum to the downside. And one thing we said here is that the next thing we did was to move our stop loss accordingly, lock in some profits. Move our stop loss to break even around 11,520, which is the entry zone for our position yesterday, as we continue to see buy pressure sitting right above that bullish trend line. Remember, we had this bullish trend line figured out since last week. It has been guiding bullish momentum, and we are since we are citing another buy pressure around this area, there is a likelihood that price might respect that bullish trend line one more time. And the fact that price has been unable to break the previous low here in the last 24 hours is a cause for concern at this point that buyers might likely take over this market. So what are we looking forward to buy the US tech for today? So to guide our trading activities for today, we have identified this bearish trend line after connecting the series of lower highs. As we can see, selling pressure since the beginning of the week. So we said a breakout of this trend line. You can see how the trend line here shares a beautiful confluence with that $11,500 level, which we identified on the daily time frame as a very important structure to reckon with. So if price action breaks out of the 11,500, it will be a good opportunity for us to buy the US tech. And if bullish momentum continues to the upside, price breaks out of the 11,570, we want to be adding more position to our existing trade here. However, if that does not happen, but instead we cite a situation where selling pressure continues below the 11,500, remember that level has been a strong selling niche at one point on our higher time frame, and leading to a breakdown of this bullish trend line, then at this point it will be clear that this bullish trend line is no longer strong enough to hold bullish momentum. And if selling pressure continues below this trend line we identified during this bearish trend line here, which falls below the 11,500, we want to be adding more position to our existing trade. And if a further breakdown of the 11,400 happens, retest of structure, we continue to add more position to our existing trade. So I wish you best of luck on this one as well, as we get ready or be on standby to catch the move when it happens. Then we went on to talk about the GBPUSD rather, and we continue to look out for selling pressure below the 1.22200 level. As you can see here, we continue to look out for selling pressure there. So as long as price remain below that structure, we remain comfortable in our sell position at this point. And in fact, we need a breakdown of the 1.21650 to give us a huge confirmation that sellers are coming in gradually in this market. As you can see, we have been in a choppy situation here since last week, and it can be very difficult or tiring to continue to monitor this trading range. So we are looking forward to a breakout of this range to give us a confirmation of where price will be going. So if at any point in time price breaks out of the 1.22500 level, then we might be looking out for buying opportunities at this point. But as long as price remain below the 1.22500 and the 1.2200 level, this is a strong sell window. We remain patient in our sell position at this point. So that is that on the GBPUSD. Then we went on to talk about the XAUUSD, the EURJPY. And on the EURJPY, we are already in the buy position. In fact, we have two positions running at this point with an approximate of about 100 pips combined. And we've already identified a structure at the 139.600, which has been a strong selling niche. And you can see what happened here during the New York session yesterday, and the last candle here showed signs of some selling pressure coming in from that area. So for those who are taking advantage of this position at the breakout of the neckline here at the 138.00 level and the breakout of the 139.250, I have told you to move your stop loss to somewhere around the structure here at the 139.100 level. Let's give some breathing room for price action to run around before probably another wave of bullish momentum will happen. But for those who have missed out on this opportunity, I have told you that we want to remain patient here, waiting out for a breakout of the 139.600 for another opportunity to add more position to our existing trade. And if at any point in time price breaks out of this trend line, we will definitely be looking out for another opportunity to add more position to our existing trade here. And don't forget how important this bullish trend line is. And I told you for this week, this trend line will continue to be our guide for trading activity. So if price continue to trade above the bullish trend line, we'll remain comfortable in our buy position. However, if at any point in time we cite a breakdown of both the 139.250, which also shares a beautiful confluence with that trend line, then we might see this as a bearish signal, as the bullish trend line is no longer strong enough to hold selling buying pressure. Then we might get ready to join that decline to the downside. And if a further breakdown of the 138.00 level happens, we want to be adding more position to our existing trade. So this is what we are looking forward to on the EURJPY for today. Then we closed the day with the XAUUSD, where we said we have been in profit since the beginning of the week. We have racked up about close to 2,000 pips here if we consider all the multiple entries that we have here. So for those who have been part of this trade, I congratulated you guys. And what we said now is that we want to be moving our stop loss to somewhere around the $1,914 and the $1,915 level, somewhere around here. Let's lock in some profit and see how far this retracement phase is going to go on the XAUUSD. So we continue to monitor price action, and remember we have a bullish trend line here which shares a confluence with the 1,895, where we said if price continue to drop to the downside, we want to remain patient. As soon as price gets into the zone, probably somewhere between the 1,900 here and the 1,895, we move our stop loss accordingly, lock in some profit probably below the 1,920, wait out and see how price action will react to the structure to determine if we are going to be getting ready to join a bullish momentum. If we start seeing buy pressure above this level, then we join to the upside, and if price breaks down the structure, we get ready to add more position to our existing trade. So these are my views here on the XAUUSD, and thank you for your attention here as we were able to take over 5 to 6 pairs for today, and I hope that we'll be on standby to catch those moves when they finally happen during the New York session today. Thank you very much for being around. I really appreciate, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we gather here again to review all the pairs and instruments we have been monitoring since the beginning of the week, and we prepare also against the New York session tomorrow. Do have a wonderful evening today. Thank you, Streamroller, and best of luck during the New York session today. Bye bye.